Good morning, everyone. Welcome to the Modern Market, where every day we discuss all things to do with the various markets, the stock market, the crypto market, the digital asset market, and the metals market. Any way we can make some or a lot of money on the internet, trying to understand the biggest trends happening in the world to make sense of it so our portfolios do well. Loaded up for discussion today, we have Bitcoin crashing below 65K briefly. It has bounced back a touch. $200 million of crypto longs were liquidated. Legendary will take us through the state of the crypto market at the moment, as well as some of the other majors. BGD Labs responsible for Aave smart contracts to leave Aave. Aave is down 7% on the week after that news. I think that's very big news. Aave being the biggest crypto permissionless lending protocol. And BGD Labs were instrumental in their growth. AI agent created by OpenAI dev accidentally sends meme coin supply to a reply guy on X. We'll get into some of the challenges that Agentic finance is facing, especially when the agents send a ton of money to random people, or allegedly random people. We'll get into that doubt component too. We've also got the latest on price action as usual, and some general thoughts on the market. To start the week, I've got Legendary and Brad in the co-host seats with me as usual. We're ready to get into it. Just a reminder, friends, before we do, nothing that we say here is financial advice. The market is very, very risky. We don't know anything for sure, so please proceed with caution and exercise your own judgment. With that out of the way, Brad, it's Monday. It's the 23rd of February. How are you doing?
We're grinding away and we're getting ready for Wednesday evening, which is when I go on vacation. So I'll have this show and I'll have Wednesday's show. But after that, I'm gone for like 2 weeks. I'm going on a trip to New Zealand, down under's little friend there. It'll be fun.
Have you been down under before?
Neither. No, I've never been to New Zealand or Australia. So pretty excited.
Interesting. What are you going to do?
No idea. I've been so busy.
Your agent's dealing with it. Crumb the agent is booking the itinerary.
Yeah, if you mean my girlfriend by agent, then yes. Allison.
That is not what I meant, actually. That's just what you're for the avoidance of doubt, Allison. That is not what I was suggesting.
Yeah, she's awesome. And I've been so cooked with getting ready for mainnet and all this stuff for Mega that she honestly just like took it and ran with it. And then I was like, I don't care. I was like, I will do whatever. I'm excited to go with you. It's like, I don't care what we do. I'll pay. Like, just like, let's go do something. So now that's part of my assignment the next 3 days. Like, I need to brush up on what the hell we signed up for so that I know what to pack and, what to get ready for.
That'd be exciting. That is nice to get some time away. Yeah, that'll be very nice. Ledge, what are you taking some time off anytime soon? What's your thoughts on taking a break in the bear market? I remember we spoke about this actually last year, where we said the biggest learning when you start in a bear market and go through the whole bull, you start to look back and think, you know what, you've got to give yourself a break during the downtimes, because when in the more busy times it gets so crazy. You've got to find a way to give yourself a break in the downtime and forgive yourself for it. Like, it's okay. Ledge, what do you think?
Yeah, kind of go back and forth on that. Like, yes, obviously you don't want to be glued to the screen all day, but on the other hand, like a ton of the relationship building,
True.
of the actual like working on stuff is done in a bear, and then you can time that from when the hype comes in, and when there's a bull market and 100 people reach out to you at the same time, it's probably like not the easiest thing to judge who's reliable, who isn't. And I feel like the community that we've gotten on the one hand with the modern market, but also some of the private chats that we're in are people we've known for years and years and years.
True.
And like, I just trust these people with everything. I have no issues giving them a ton of money, borrowing, lending, etc. And that is trust that you didn't build in a hype cycle where everyone's chasing the next thing to invest in. So yeah, you can take it slower, but disappearing in a bear market, I don't think would be the wise thing to do, because then you're too late to even notice when the music starts playing again.
That I think is fair. Yeah, I mean, if you literally clock out and expect to clock back in, then yes, I agree with that. But I think more the attitude of take the time when you need it, a week here, a day here or there, like how we canceled the show on that day on a Friday when the market was crashing because you were in Abu Dhabi. It was like, let's just take the day, do a company day, go through some things, have a bigger discussion. The show will be back on Monday. To be honest, that's the beauty of going daily. I think it's the beauty of turning up all the time, that you feel like, okay, well, maybe I can take some time. Although I'm not sure when I took the last time, but right. Well, the news is not stopping. There's still a ton of stuff to discuss in any event today. Had a huge article drop from Citrini, which we'll get into as well on top of the headlines. So we'll take you through everything as well. No break yet for the show. So let's get into it, starting with the price action. As always, to get you up to speed with what you need to know on price, Bitcoin did dip beneath 65K as $200 million of longs were liquidated. Now it's just down a couple of percent, still at 66. Doesn't look great. ETH is down 3% as well. Went beneath 1.9K, now just ticked up above. Again, not looking great. XRP is flat, $1.40. BNB is at 606. Sol is down 5% to $80, went beneath that for a while. And Hyperliquid is down 6% back to 27. So kind of ranging in that high 20s-ish region. On the meme coin side of things, Pippin once again is doing what Pippin does, up 16% to 700 mil FTV now. So that is pretty crazy. And we still don't know really what it does, or at least I don't. Pepe is flat. All the other ones are kind of flat. Pump is down 6%, dipping beneath the 2 billion FTV again. SPX is down 6% as well. WIF is down 1%. Farcoin is down 13%. So look, I think these things are really, if Bitcoin is going to keep going down, these things are going to keep getting hit. I know they say they're not always much more less than Bitcoin, but they will keep going down if Bitcoin keeps going down. So brace yourselves if you're still fully allocated to crypto specifically. Into the headlines themselves, we'll be talking some other stuff. We will talk about Bitcoin's move down and some of the majors moves. Notably, gold has been doing very well over the weekend. And Ledge, maybe in your section, you can touch a little bit on the tariff conversation that broke after the show on Friday. We've got Trump saying there's going to, even though the Supreme Court said the tariffs are not okay and they can't have them, he then Trump reinserted them at 10% and then decided over the weekend to up them to 15%. So I'm not really sure what's going on there, but maybe Ledge can just give it a brief snapshot. We'll also talk BGD Labs, responsible for the Aave smart contracts, leaving Aave, a very notable contributor to Aave's success. Brad will take us through that, and then Ledge will come back with the AI agent created by an OpenAI dev accidentally sending the meme coin supply to a reply guy on X. Serious issues sometimes with this new agentic finance and trusting agents with all of your money and corporate funds. So we'll discuss some of the issues there. And I'll also get into the Citrini article, which just dropped with an incredible bear thesis. So we'll try to get on top of that. I think it was at least 10,000 words written. So we'll discuss that shortly. In the rest of the news, Tether USDT circulating supply drops by about $1.5 billion in February. We have said before, just keeping an eye on stablecoin supply on chain is a great way to track the health of the market, whether in your bull market or a bear. Always trending up in good times and tending to plateau or dip down in worse times. Flying Tulip announced $200 million deposited to fund its build out. They had said they were aiming for $1 billion, but it was just a max cap, and that more than 120K has already been generated from that yield. The yield is what will be funding the development because the depositors can withdraw their funds at any time. Azura Trade comes back as a trading terminal using USD with no gas, bridging, or trading fees. I was kind of confused in the announcement. They were presenting it as a new thing. I was using Azura back in the day and was wondering where on earth it went. So Azura is back. I don't know if I'll go back to it though, because they kind of disappeared very randomly. I don't know if any of you guys know about it. We'll touch on it in a sec. And then finally, this will be cool. Rhynotic announces TokenWorks Season 2 goes live today, the season after the successful Punk strategy launch. This is the concept where you back a creator with a certain amount of money and you just see what they are able to code and what kind of things that they come up with. It was a 1 ETH contribution last time, and I believe the TokenWorks Season 1 holders received all of their money back plus more in fees. So Rhynotic really did a good job in Season 1. Who knows what he will build out in Season 2? That goes live today, the raise. So that's the news, guys, to get you up to speed with everything that you need to know. We'll talk the headlines in a moment. We'll talk the Citrini article in a moment as well. But before we get there, maybe coming to you first, Brad, what is catching your attention from here or anything else around space?
Yeah, so going from the headlines, so the Zero thing, I only recognize them because I remember ICO Beast was rocking a badge for a while, but I never did anything with them. But yeah, they were around. They were pretty heavy for, God, it had to have been like a year or so ago.
They had a lot of people who were really saying this is a great trading terminal. You can put your money in from whatever. You can trade a variety of assets. It almost felt a little bit like FTX inside of that. It wasn't a centralized exchange, but it felt a little bit like,
you could just never compare, like use that as a compliment.
no, but well, I am actually trying to use it as a compliment because it felt like it was a good interface, but it wasn't a centralized exchange. And then they just disappeared. I have no idea what happened. Do you know what happened? I was a user. I used it a lot. They had a referral program.
Yeah, I never clicked the buttons. I'm not actually sure. So, but it might be good to go back to some of them badgers to see, if there's insight there. But and the other one is this actually still on the screen is the TokenWorks Season 2 thing. I know I mentioned it previously, but I actually got into Season 1, and yes, we got funds back. And I read into this one, and I saw that even, I think it was like 10 or 15% of this was actually going to buy the Punkworks Punk strategy token,
which will in turn create more fees
go to
for you
me.
guys in Season 1, right?
Yeah. So I honestly
just explain how Season 1 works so people know, because I think honestly this is one of the coolest things that's come out of the whole cycle. This is how people should raise in crypto, in my opinion. But explain what happened.
Yeah, so Rhynotic has been around for a while as an experimenter with projects, code, whatever, like for a while. He announced the TokenWorks Season 1, and I actually don't even know that it was called TokenWorks. There was like a funding works or something. There's another works style project, but he announced it about a year or so ago, and said, "Hey, I'm going to raise 1 ETH per NFT. I forget the total number of NFTs. And I'm going to do this, and I'm going to use the money to continue to experiment, and that's what I'm going to do. Like I'm just that's my promise to you guys. No, there's no compensation or anything for this. This is what you're giving to me. You can redeem it at any point. You can come back and say, hey, I've seen you experiment for 6 months, and you've burnt half the funds, and I want my money back. You could actually go and burn your NFT and get the money back." So he did that. He was experimenting with the money. I gave it to him because, having seen his previous experiments, I assumed he would come up with something that would garner attention from the timeline, because he's pretty good at it. He did the circle thing. He did this death strategy thing. He did it wasn't death strategy, but it was like a death project. And then he ultimately came up with punk strategy, which caught a whole meta for a second there. And all the fees for that, he ended up directing a portion of it to the holders of his original TokenWorks thing. That was his way of giving back. And he's not directly paying you, but he created something that caught attention, that grabbed fees that he could route to people to make them whole. And eventually it did. Like the intention wasn't to make it whole; it was just to like give back. But the project was such a huge success. I think I paid 1 ETH, and to this date, I've claimed 1.5, 2 ETH, something like that. So pretty successful, and it's forever, right? He does these things on chain in smart contracts in a way that like it literally will always be paying me money, which is quite fun for me as a person that does this. So that's the concept. That's what he's done. And now he's doing a Season 2 where he does the same things. Like, okay, more money. Let me do this thing. People can give me their NFTs that I can continue to build stuff, have fun, experiment. My hesitation, though, is that it's the second loop on the euthanasia roller coaster. And as someone who's on the first loop, I do not think it behooves me to continue to go down the loops, especially into a bear market where people right now are just inherently not very risk on. Like, people just aren't wanting to experiment right now, frankly. Yeah, so I'm torn. You're on mute.
Really good explanation. I think it's really helpful to just lay that out, because I do think it's one of the coolest things, and you had the foresight to participate, which is good. One was I going to say? Yeah, I know what you mean. You're in the first one, and in a way, you can just not touch anything, and you'll just keep earning from the Punkster experiment, right? And that will continue to earn fees, and you'll keep earning. The one thing I'd want to check, I don't know if there's information on it, is that exact same model running for season 2? Like, if he launches season 2, is that whatever he creates in season 2, is it definitely going to go to the NFT holders? I don't know if that promise was even made at the beginning of season 1, to be honest. Everyone just trusted him to do it, and he did. So if there was someone you were going to trust to experiment well and in a trustworthy way, I think it would probably be Rhynotic. But I take your point, Brett. It's a bad time in the market.
Had I not had exposure to one, it becomes an easier decision.
Yeah, I know what you mean. I think I'm going to double click on it later. Ledge, what's catching your attention? What are you finding interesting around the market?
Nothing to add to that, really. And I know that you want to talk to the Citrini article, which is quite a long one. So I'd rather have my thoughts shared on that one because I read it too and it's very interesting.
Okay, let's do that then. Right, let's get into it. The Citrini article, if you have been awake just a little bit or not been online over the weekend, has completely taken crypto Twitter and more traditional financial Twitter by storm, because it has articulated a very bearish thesis for an outlook over the next few years because of AI's rise to supremacy. So this is essentially what happened. Citrini Research, very well-known publication for publishing excellent market research, published a speculative scenario piece written as if it were a macro memo from June 2028. So it's kind of forecasting, but it's imagining that you're in the future, and it's saying that this is a piece analyzing the last few years, looking back, imagining what happens if AI works exactly as well as bulls expected it to. And the conclusion is that it turns out to be very bearish for the economy. Citrini make clear that it's a thought exercise, not a prediction, but it maps out a detailed and plausible chain of events from AI-driven layoffs through to a full-blown financial crisis. So just so you know, like the type of thinking, the idea of this is to take a set of assumptions, in this case, that AI capabilities continues to improve exponentially, and follow the second and third order consequences to their logical conclusions. And, you know, there's just saying it's a forecast. It's not a definitive prediction. It's a way of stress testing their ideas for the future. The core argument that they are trying to make is that the core argument is one that no one is really suggesting at the moment. So at the moment, the bull case for AI is that margins expand, productivity surges, earnings beat. It's also the mechanism that destroys the consumer spending power. So whilst everyone is thinking about the positive stuff so far, this piece suggests that all of those good things that happen as a consequence of AI ends up being the factor that destroys the consumer spending power. Companies will replace white-collar workers with AI, profits go up, stocks rally, but the displaced workers stop spending. Since the top 20% of earners account for roughly 65% of all consumer spending in the US, even modest displacement at that income level has an outsized impact on the real economy. And this piece calls it the ghost GDP, output that shows up in national accounts, but never actually circulates through households. So look, we could talk about it in great detail, but maybe I'll just lay out a few ways that it plays out. It first talks about agentic coding tools, collapsing the cost of replicating mid-market SaaS products, crushing software company revenue, and giving procurement teams serious leverage in negotiations. Then AI agents go mainstream in consumer commerce. And they, you know, because that'll displace a lot of the apps, because agents will optimize every transaction for price, whereas obviously humans will just think, oh, I've got loyalty to this specific platform, I'll just stay there. Whereas agents will be able to check prices across all kinds of platforms and make the best decision on price. Companies like DoorDash, MasterCard, and Amex get hit as their moats, which are essentially built on human friction and habit, evaporate. Meanwhile, companies respond to margin pressure by cutting more headcount and reinvesting savings into AI. This was one of the points it made over and over again. where yes, these companies become more profitable. Well, some companies become more profitable, but the ones that are feeling the pressure cut headcount. But what do they do with the extra capital that they have? They're just constantly serving it back into AI, a feedback loop, it says, with no natural break. So displaced white collar workers end up flooding into lower paid roles, often in the gig economy, for example, compressing wages across the board. Private credit, bloated with private equity backed software deals, underwritten on the assumption that recurring revenue would keep recurring, starts defaulting. Um, and then the final stage is the mortgage market. And this is the one that I think gets people even more worried than anything. Prime borrowers start missing payments, prime being the better class mortgages, right? It's not just the subprime, which is all of that housing crisis we've been through before, when you pack up a load of junk mortgages in undesirable locations and places. This is the top stuff, we're saying, because the top people are getting displaced. So now those people are the people who can no longer afford these prices that we've pushed on them. And it's not because the loans were bad at origination, but because the world has changed after they were written. So it then goes on to say the scenario ends with the S&P down 38% from highs and unemployment at 10.2%. One quick note on that, as people get worried, is that I think it was suggesting of a high for the rest of this year into October 2026. So again, this is a thought piece. It's a prediction piece. It's a piece that's meant to be read as part of your thinking, trying to think through some of the potential scenarios and prepare for them, rather than just get surprised by them as things happen. And as the article suggests, this is a scenario. It is not a base case, but it's a valuable one because it challenges the default assumption in markets right now, which is that AI is unambiguously good for equities. I think that is, everyone thinks, okay, if everything's deflationary, everything just goes up. Maybe, the government's going to print endlessly, therefore the nominal value of everything will go up. But I guess this is preparing you for an alternative scenario where there are some real negative externalities from the AI boom, which is clearly real as well, right? There's clearly good things happening. People are becoming more efficient, but it's sucking in all of this other investment and displacing all kinds of people. So I'd say SaaS compression, white collar displacement, private credit exposure to software deals, the fragility of semi-liquid fund structures are all things that are happening right now in early form. And that's it. That's the key summary of the things that I think people want to get a sense of. There's been all kinds of reaction to this. In fact, I'll just pull up one interesting data point. Ledge, I don't know if you can share the screen and scroll to the bit which I've got in the document that I'm looking at. If you can see where I'm looking, it's called the 3 drivers of the 2028 global intelligence crisis. I think that the bet here is something which we've actually spoken about on the show before, which is that labor's share of GDP is declining, and that's a long trend. So through Q1 of labor share of GDP declined from 64% in 1974 to 56% in 2024, a 4-decade grind lower, driven by globalization, automation, and the steady erosion of worker bargaining power. In the 4 years since AI began its exponential improvement, so this is the predictive part, that has dropped to 46%. So this article suggests that labor's share of GDP will decline from 56% a couple of years ago to 46%. And that is contrasted with the 64% number from in 1974, which is kind of something we've been talking about on the show for a while, right? The concept that human labor has been in, the importance of human labor has been in decline for a long time. At one point, people had to work 6 days a week on a farm, and they had to work. Then some of that stuff got automated. Then it was a 5-day. There might be things in between this, by the way. I'm simplifying. Then it was a 5-day working week, 9 to 5. You got to be there, clock in, clock out. Well, first it was factories. Then it's kind of moving into offices. Now it's like people are talking about working from home half the time. Then people are talking about a 4-day working week. We have been continuously less useful as humans over it's not just since AI. This is a trend that's been happening for a while. And so that is, but I guess the point is that this is going to even accelerate that even further. There's been a bunch of takes coming off the back of this. Maybe I'll just pick up a couple. Eric Borkunis's take was that in this scenario, in this kind of doomsday scenario, can you imagine what they'd print in this situation? Biblical level QE. It's an interesting thought experiment, though. So that's the argument that, look, fair enough. This may play out to some degree, but if this was to play out, you cannot imagine how much money is going to get printed as part of it. And then, so that is one thing I think to prepare for. I think that is at least in part why gold has been moving up for a variety of reasons, not only AI but also the US, what's going on geopolitically. Interestingly, one of the company's CEOs, I think is the COO, Andy Fang, co-founder of DoorDash, which was called out specifically as a company that should be worried about what is going on. They actually replied to the tweet because DoorDash, again, is one of these things that the argument is agents will get rid of any loyalty that you have to one particular app. It will look around all of the apps, including new apps that get created, and find you the best price. Andy Fang said, we definitely believe agentic commerce will be transformative to the industry. DoorDash will need to continue to earn the right to service customers or agents end to end. With agents, how customers determine their preferences, how they want support will evolve. No question, we're going to need to adapt to it. The onus will be on us to create a compelling ecosystem for agents to participate in. Not only that, we're going to need to ensure our merchant partners can do the same for their own customers. That's why we're so focused on the agentic commerce tools we build for ourselves and our merchant partners. So a lot to deal with here. I'm going to stop there because I think I want to get you guys in the conversation, see what you guys were thinking. But in essence, that was a good thought experiment to read, obviously on the more bearish side, but I think it was helpful. Ledge, coming to you first. How did you read it? What was your response? Any points that I made that you'd want to come back on? What do you think?
So many thoughts on that. Maybe let's start with the last one, with the loyalty factor, right? Because DoorDash is the example in there that you will have vibe coded copies spinning up. You will have aggregators. You will have people who won't have a job anymore and suddenly participate in the gig economy. I think there's an example there of someone doing some sort of SaaS job, then obviously they lose that because they get displaced by AI. Then they start to be an Uber driver, and the salary goes down from 180 to 45K. And because so many new workers are joining the gig economy, that's also driving down prices, and there's no loyalty there. But I don't really see the loyalty factor as an issue because I just don't think there should be loyalty. The one example I keep thinking of is there's a service in Austria, and I bet that a ton of countries have that. It's nothing unique about that. It checks for your electricity price and whomever you're using. And typically this is a 12-month contract here. And whenever the 12 months over, they're just looking, okay, who has the cheapest electricity for you, and it's going to roll you over. There's no need to be loyal. I just care when that my Mac Studio and my OpenClaw is running. I don't give a damn where my electricity is coming from. And I mean, obviously it's a sustainable mix here in Austria, as everything has to be, but like I couldn't even opt into nuclear or whatever. But I don't care like who's delivering that. I just want that to be cheap, and I mean, ideally to work without any issue. But because we only have one grid, the grid owner or the grid manager is the same. In this case, it's the Republic of Austria, so it doesn't really matter. No loyalty there. If I have a good doctor and I go to them and they build knowledge about me, they've doing great things over the years, I'll probably keep coming back to them and have a different level of loyalty there. So that's the one thing. Not everything needs to have loyalty. It's not the case. Then actually, in terms of the thoughts in the article, I think another aspect of this is I don't think this is a doomsday scenario, because I've seen a ton of people push back against that and be like, no, we're going to live in this utopia and everyone can vibe code their dreams into reality. And, I can just prompt that I want to run my own cafe and I will have my own cafe to run. I just don't think this utopia will become real. And we will face the problem that Harari is describing in his Homo Deus book, which is our entire society plus political system is not made for people to feel obsolete. It is made to have this war and clash of classes. You have the employees and the employers, and employers obviously want to pay less taxes and optimize for profit, and employees want to work less and make more money. And this is how party systems have been built on, and this is how people have been fighting to not work the 6 days anymore, which you mentioned in the past, to now work 5 days or now work 4 days, and have better working conditions. But this is not being built as a system to tell you, hey, you are actually useless. You will maybe get some sort of UBI, but we do not really need you. So this will, on top of everything that's being described in the article, in this like potential future scenario analysis, whatever, will come with societal tensions which are not really being mentioned. So I don't think that if you see the unemployment rates growing like that and all the things are happening, and people, if whether they get UBI or not, will just simply feel obsolete, that this is going to be a super peaceful transition. And then there is because some people have been pushing back that this is not realistic to see this level of displacement. There's a great website. I mean, depending, I think it's great from the data standpoint, might not be great if your job's affected, which is looking at 5,000 different job types and is trying to place an average risk score of all these jobs being replaced by AI by 2030. And right now, basically, they're saying we are on track for 60% of jobs to either be in the critical or high category, which means they will be very, very likely, most likely be obsolete by 2030. And obviously, there's like the highest risk jobs in there, like data entry clerk, typing specialist, telephone operator, switchboard operator, typist. And then you have the low risk jobs like the electrical line worker or rock splitter, which probably won't be done by your OpenClaw bot by 2030. But the interesting thing is, if you break it down by industry, obviously admin is completely cooked, 72%. But even healthcare and education is above 50%. Like even these industries, basically 1 out of 2 workers in there could also be replaced by 2030 by AI. Now, obviously, this is someone putting together methodology and looking at things and having some sort of opinion on that. And there is a good disclosure on how they're looking at the methodology. But I think it's a pretty good analysis. And I just think that even if it's not 2028, like in the Citrini article, it's 2030. It is a thing that will concern us over the next 3 to 4 years. And yeah, I just don't think that this point of saying it's going to be so nice, everyone can do whatever they want and vibe code their dreams into reality is how the daily life in reality will look like for most people. It will be the case for some, certainly, who have made great money, who have had a good job, and now vibe coding the things that they always wanted to do to a similar extent. Maybe like Brett is now on the experimenting side on Mega, and I'm building my stuff because I have the time and means to do so. But I just don't think this will be the average reality of most people in 4 to 5 years.
Okay, a lot of interesting thoughts there. I think those are good. Some good ideas there. Brad, coming to you. Do you have any response to Legendary's thoughts? What was your response to the article? Just the general sentiment in it. What are you thinking?
Yeah, so I tend to. I'm not doing it. Like this thing will fine. We'll figure out whatever it has to be. I also don't.
Brad, sorry, your audio is really crashing out for me. Ledge, can you hear him?
I actually can hear Brad well.
Okay, so you continue to speak then, Brad. Ledge, you respond to him after. It's coming back through bad for me, Brad, but take it away.
Yeah, he's fading on my screen too. Okay, so yeah, I'll say that I do not believe in the dystopian future where everyone's all happy and their hair is building this like euphoric stuff. I think we'll find some steady state. It's just how it always lands in the middle of what everyone's fears. It's never the downside, it's never the upside. It's just somewhere in the middle, probably skewed towards the upside based on how impactful AI is, what my guess is. I will say 2 things stood out to me as one is like a bull case for the loyalty thing and crypto specifically. You talking about DoorDash and you just wanting the end state. Whenever you get to the point wherever you are comfortable ordering your food through Nimbus is a Legendary's sweet little OpenClaw instance. Whenever he gets to the point where he says, bro, just give me some shrimp. And Nimbus is going to go and he's going to hit an MCP from a bunch of different services and see this one like is one that he likes. And oh, they offer crypto. And because it's crypto, it doesn't have the 3% tax on the card. And it's going to go,
Yes.
clearly, we should do this with stable coins because it saves you doing this 5 times a week, do the 3% tax over a 0.04% tax or whatever they end up doing with that. Like it's just going to be like, yeah, why the F would you be paying this with a credit card, with a credit card fee, whatever? So that's a bull case for crypto, real permissionless finance, all this stuff. Awesome. The other one is the thing that scares me, or doesn't scare me, but I don't see like some equilibrium that is struck just yet. Is at home to my neighbor. My neighbor is a recently turned doctor, and we're just like, I started checking his workload, right? And he had this entire upbringing, his entire education, where he worked on site for a long time and basically did all his cut work. That's how he sharpened his knife, right? Doing all of his work the day in, day out, like really on your knowledge, because it was information that was passed on by either a senior, like an actual doctor at the time, or just like whatever, like just like having to do the reps, right? Do the reps that maybe an actual doctor did not want to do, so to hand it off to him. And he's on the flip side of that now, where he's handing off this work to these lower level people so that they can do this. It's also very prevalent in like the lawyer industry, right, or the law industry, where these lawyers give a lot of the paperwork to a lot of these lower level, these juniors, and say, go read this, proofread this, find this issue, do whatever. And that's where they get their training, and then eventually they can become a lawyer and they can hand that off to the next generation of person. And AI's rapid acceleration at this phase is basically cutting out the need for that junior, right? So now we're in this transition phase. Juniors don't have a senior because the senior can offload to a more efficient junior, which is the AI instance, right? As it's continuing to market. It's cutting out that next of people that would have to oversee the AI, which is broadly how a lot of people say these things should be treated. It's like, it's not perfect. You should actually just like have a senior level person sit on top of it and proofread and make sure that's doing the right thing and make sure that everything is Gucci. But if you kill the next wave of the expert, then who is the expert to overlook the AI, right? Because the AI itself is now the junior and also the senior. So like it's like this weird paradox of like, okay, who enters in that next round? I don't know how that's ultimately solved. And maybe it is just that AI gets to the point where like it can be both the junior and the senior, and it's just the senior for everyone, literally everyone, because it one shots it perfectly every single time. That's probably the likely outcome that we face. It's just like an interesting dynamic for the transition. I don't know if I'm like the entire economy, but those are some trends.
So basically, what you're saying, as a result of that, we have to figure it out within a generation, because otherwise we'll have a massive issue. So say you're looking at devs, and now you have devs who actually have had years, decades, whatever of experience, and then they're working, say, at Anthropic, and then they can. Anthropic is like mostly already obviously using Claude internally to develop Claude, but they're like overseeing the prompting and overseeing the agentic engineering and feedbacking that. And that works because they've had like previous real life experience and they can actually understand what's on the screen. But if that generation is dying out, is retiring before we fix that knowledge transfer senior junior problem that you just described, then we are probably cooked. So we have now on this route of acceleration, one generation time to make sure that this knowledge gap won't cook us, because otherwise we'll end in a situation where we have tech that is so advanced that nobody can use anymore.
Yeah, I think that is.
Yeah, and maybe.
Yeah, I was just gonna go back to some of the old the other points, because I think that's definitely part of it. We've touched on that on the show before. I think the other thing that was worrying, that is worrying people is, and to your point about stablecoins, Brad, it specifically talks about stablecoins and gives it as an example about how agents will obviously choose that crypto option, right? Which actually which can allow you to be incredibly bullish crypto rails, because companies will know that if you offer the stablecoin option, that will make you preferable over the version of payment that is not on stablecoin rails. So I actually think that's very, very bullish crypto rails, because people will want, companies will want to be on those rails so that they can be the ones selected by the agent. Because the agent has no brand loyalty, it will just be optimized for getting you the best deal and saving you on fees. And I think it's like 2.5% that you'd save every time that you transact with crypto rails, compared with if you use a Visa card, MasterCard, or any of those things. So, okay, final question on this, because then we'll maybe get to the other stuff. Although I'm happy to take longer on this, because it was such a important article over the weekend. And yeah, Brett, I think even if Ledge can hear you, it's still coming through bad on the stream. So you might want to drop down and come back and see if you come through better in a second. Ledge, thinking through the outlook. So this is a 4-year, sorry, no, 2-year outlook. Sorry, thinking through to 2028, given that it's 2026 now. People have kind of got a bit bearish in general on the timeline, and that's feeling a bit more immediate. Do you think this outlook, this thesis, is something to worry about immediately? Is this one which you are concerned about? Though the article references a 38% drop in the S&P by 2028. And again, it's predictive, not trying to be dramatic. That's just what they are doing as part of their thought experiment. But how do you respond to that concept?
I think it absolutely is something to be worried about, because there's two things coming together. There's this image that probably most have seen over the weekend, which is, for those who are not watching us on screen, it's a chart that's showing the entire global population, 8.1 billion humans, represented in 2.5k dots. So each dot is 3.2 million people. And I would say, like, 84%, yeah, sorry, there's a legend there. 84% of the entire chart is gray dots, which are people who've never used AI. Then you have 16%, 1.3 billion people who are using free chatbots. Then you have 0.3%, which is 15 to 25 mil, who are paying $20 a month, which is the basic tier for AI subscriptions. That's 0.3% of the global human population. And then you have users coding scaffold. So basically, the nerds doing the Claude code and the codexing, so aka the real fun stuff, and that's 0.04%. That's a single dot. That's 2 to 5 million people. So basically nobody. And if I talk to most people in my even circle of friends, yes, some of them started to use AI more and more, but the majority of people are telling me something along the lines of, I've used ChatGPT a year ago, it was bad, and I haven't come back ever since. And Brett and I had a long conversation, had a long call over the weekend, and Brett made the fantastic point of saying that we are just not used to this extrapolation, to this incredible acceleration, how AI is self-evolving. Like, you can have a task that did not work with Opus 4.5, but now you have Opus 4.6 a couple months later, and it's working. You have something that didn't work today, and then there's another model. There's, I don't know, Gemini 3.1 or GLM5 or whatever is coming out, and you can use that, and something that suddenly, something that wasn't possible yesterday is possible today, is possible in a week. And we are not used to think in terms like that. We are, like, used in longer product cycles, and even they have accelerated, but still the fastest things that are happening is you have an iPhone 17 last year, and iPhone 18 is going to come out this year. Like, a 1-year product cycle is fast. Then you have cars with a, I don't know, 4 to 5 year product cycle with a couple facelifts in between. We're not used to things being meaningfully different within the time span of a couple weeks or a couple months. And this is why many people are underestimating that, while, like, basically on the footing to say that, nah, it wasn't good last year, so it's not going to be good now. Why should I try it again? But that is basically, if you look at this chart, that's the employee side. If on the employer side, you will see efficiencies in companies to be made. You will see entrepreneurs being able to do things to scale up while scaling down on people, to see the massive layoffs that Amazon has been doing and other companies have been doing, they will be way faster to adopt these tools because it's ultimately linked to the shareholder value. It's ultimately linked to the profits that they're making. So I think that many people will be surprised by how fast this AI adoption looks like. And just one more concrete thing on that comes to mind is that on the timeline, you've been seeing a ton of people, including we talked about that, Mark Cuban being in the video. Oh, hey, a good business is now, if you can set up an OpenClaw, if you can set up a sensible agentic workflow, go to a company, go to a couple entrepreneurs, sell it to them, sell it for 5, sell it for 10K, whatever, and just help them with the onboarding. And that might be a good opportunity, but that's also an opportunity that's probably only going to be around for like, I don't know, half a year to 1 year, because then the onboarding will be so good. And then the door dashes and the company that's also what the Citrini article is saying, which are coming under the most pressure because they see AI as the biggest threat to the business model. Their only answer then can be to also be the fastest one to fully embrace it and like make it as easy for whoever the end customer is, if that's a software that now an agent is deciding whether to purchase or not, or DoorDash starting to aggregate other services as well. They have to become AI's like most aggressive users to even have a chance at survival, and that will further foster this acceleration. So I do think that people will be surprised by how much the world can change within a couple of years.
Okay, a lot to digest there. A lot to digest. One interesting final point, and maybe we just vibe on this until the end of the show now, because I know we had some other headlines and stuff, but this was clearly the most impactful article or thing to discuss over the weekend. This was a tweet from Didi noting the $50 billion of Indian IT services market value was eroded in the last 30 days. Just picking out another interesting data point. The Citrini article predicts it will collapse even more. It shares here a number of stocks down 15, 25, 17, 25, 30% in the last 30 days. Saying the IT services business model absolutely breaks at the current capability of AI tooling, and it's 10% of Indian GDP. India has obviously been one of the places in the world that has benefited hugely from outsourcing and people looking for an intelligent labor force that is cheaper than their current location. And at 10% of GDP, that's a really big number that could take a hit here as people not only de-risk out, well, it's not de-risk, not only reduce costs in their own country, right? But reduce costs that they've placed in other countries, which AI can also outperform. So very, very interesting, a lot to digest. I would say, I don't know, I'm trying to wrap it up. By the way, it was a 10,000, I think it was a 10,000 word article. So it was a lot to get through. I think it's a helpful data point. It's a helpful thing to read through. I think we did a great job summarizing it. And so it's to be aware of. I think the thing most pressing for the normal people like ourselves or people listening is that, I mean, maybe this is the common takeaway at the moment, right? We've got to equip yourselves with this stuff. And I guess that broad point I made about how we've been in a trend, a century-long trend of humans becoming less useful. And so it's not only because of AI that you need to equip yourselves and be better. It's because we're in a century-long trend of, and maybe longer, of humans becoming less useful, not needing to work 6 days anymore, not needing to work 5 days anymore, not needing even to work 9 to 5 every day anymore, because we're not useful enough, or things can be done without us. And so what are you going to do? What are the areas that you can do? I'm very, very long IRL stuff and very long experiential things. I'm very big on live experiences, partly why years ago we decided to not go down the podcast route of other, on-demand podcasts, and stay live, stay community, shared experience. I think people got to think about how they can integrate that into their experiences and businesses, and how they think about the future. So that's my kind of concluding take. Although, to be fair, guys, you gotta, to digest this properly, you could talk another hour, and you got to read it and do some more on your own. But maybe, Brad, coming to you here to check if your connection's a little bit better. Maybe it isn't. Do you have a final take to try to close this out?
Can you hear me?
I can hear you.
I will just say that I'm happy to be in that 0.04%. I'll see you guys on the Citadel.
We're in a race to the Citadel, guys. Get in the 0.4%. Otherwise you're not in the Citadel. I mean, it does feel. Do you know what I did the other day? Just maybe a quick anecdote to share to close out. As I said, we're not going to do the formal headlines. I was just looking at this company that I really like. It's a humongous company, one that I've spoken about before, about being bullish, and they said they were hiring. And I just thought, let me go see what you can do there. What can you do at a company? I've been out of the jobs market for a while, right? I clicked in. Me as a university educated former teacher, former lawyer, hopefully competent person, I can barely even find a role that I would want to do, or that I think would be a match for me. I think there's been already a humongous amount of displacement, and the proportions of things that people are hiring for, so much software engineering, so much on the engineering side, so much on the, what else was there? It's just so engineering heavy. And then if you have any kind of more human component, i.e. like business, like, relationships or managing people or stuff, it might be something to do with social media. It might be something to do with growth. It might be something to do with partnerships or HR. Like, I think those are your options left if you're not in one of these core skills anymore. I don't know if you guys have reflected on that at all, but I think maybe become so unemployable that there's not even a job out there anymore. Have you guys ever looked into that? Ledge, do you know where you would be employed in a future workforce that's already shrinking?
But I'm unemployable. I think I told you on a private call that my thing is make as much money as I can before AGI, and hopefully be able to then chill with the money that I made plus whatever UBI is coming at me. So like make it before I get to that point and see how the economy of the future will look like. Like all the interesting jobs out there, I know, working electrical lines, being a landman, and working in oil field, and all of that stuff, which is super interesting. I don't have the skills for. I'm not gonna retrain that at this age. So I'm gonna stick with bread and hopefully make it in the Citadel.
I'm gonna become a painter. I'm gonna do like decorating or a chef. That's what I'm gonna do. Still gonna need a chef. Maybe a robot can be a chef, but will robots be able to come up with their own recipes?
Yes.
That I don't know. The answer is yes.
I have maybe one last question for you, B, because there's one part in the article that talks about human relationships, and I know you probably have a strong thought on that. And basically, I think the wording is saying that we'll come to the realization. Let me actually find it. Relationships. Where is it? We had overestimated. There we go. The value of human relationships. Turns out that a lot of what people called relationships was simply friction with a friendly face. That is the part of the article that's speaking to the fact that, oh, because you have a good relationship with whatever company you used to purchase whatever service from, but once AI agents handle that, they don't care. They just want to have the best offer. Would you push back on that a bit and say, no, that to a certain extent, human relationships in this business context still matter? Or how do you think about this aspect specifically?
I would definitely push back against that aspect. If you speak to business people who are leaders and CEOs and stuff, they will talk relentlessly about relationships and prioritizing them, and things like sticking true to your word, building strong relationships. I think what this means, maybe, although I don't know if I read that part in detail. Well, I think the relationship between individual and corporation is dead. Like, I think that has already been lost. And so to the extent that it's a relationship between an individual and someone at a corporation, maybe that, consumer and corporation, that relationship is not relevant. But the relationship between CEO and CEO to decide whether they're going to work together to partner on some initiative, I think that will always be important. I would not short human relationships. Maybe a final thought for me though on the ingenuity side, and maybe to be slightly more optimistic, is that every other time tech has entered into the world before this, we have always adapted and been ingenious enough to create new opportunities. I don't know. I understand the thesis and I understand why this is a bear case scenario, but I'm actually fairly optimistic that there will be more things for people to do. I feel like there's too many people, maybe too negative. However, I'm also of the opinion that, this big opinion that I've had, which is we have, I think the middle class is a historical anomaly, and the expectations of the common worker has reached a level which is far higher than ever in human history. And it is uncommon for you as a normal worker to be able to afford your own house, to be able to live this kind of life of leisure where you own your own house, roof over your head, and you get to go on holiday once a year and you do all these things. I don't know if that's common. It certainly wasn't common in human history before, and I think that the expectations have just got a lot higher. And so I wonder whether there needs to. I'm not saying that I would like this to happen. I'm saying I think this is where we are trending, where a return to the mean, a mean reversion, where the people in the middle class get dragged down, and there's the middle class continues to get squeezed. And maybe even some, this article talks a lot about the white collar group getting hit the hardest. Maybe some of them have to get shed as well. They have to take a few steps down. So yeah, let's see. We've always managed to figure out ways before how to get around this, but going to need people to step up. If you pair this with the general geopolitical situation and all of those things happening, I think that probably gives you a little bit of cause for concern too. But we will see. Any final thought, Ledge, on my thought before we close out?
No, very good points. I think I could continue this discussion with you for a couple of hours, but I also think we have to unfortunately close the show for the day.
Right, let's do it. That's the show for today, guys. Hope you enjoyed the discussion. There's a lot of information to convey there. We didn't really get into the headlines as such, but we will obviously be back tomorrow, same time, same place, going through the headlines and whatever other interesting notes, articles, viral posts that we think are relevant to make sure you're up to speed with everything that you need to know for your investing future. We'll be back same time, same place tomorrow. Have a wonderful day. Take care. See you tomorrow. Bye-bye.